Good afternoon. Time to check in on the markets. So we had Asian markets wallowing near two-year lows, and this is on the back of a strengthening dollar, instability in the UK bond markets, as well as the upcoming US CPI figures, which gave rise to a wild session on Wall Street overnight. European markets steady at this point, with the British pound recovering from a 13-day low. The Bank of England governor reiterating that they will be ending their bond buying program at the end of the week. That sent Treasury yields and the dollar higher. And just to mention on that gold price, that fluctuated, and also another highlight is that the gold price is down 19% so far from reaching a high that was set in March. Nonetheless, locally, we had interim results from Zeda Investments, share price up 1.6%. And then Steinhoff announcing that Pepco, which is its low-cost European retailer, is planning on expanding into Portugal as well as Greece in the year 2023, making this announcement ahead of its full-year earnings, which are due on December 13th. Looking at the rand, trading at 18.20. And the Brent price, $94. But to talk to us about the markets and how we interpret investments going forward, we are joined by Carmen Belona from Absa Asset Management. Carmen, thank you so much for your time. So you have the Asian picture with a lot of investors digesting what the IMF said yesterday with regards to their global growth expectations. On the back of all of that, how's our JSC handling that news of a possible recession? We don't know.
Yeah, so I think recession has been an overriding theme for most of this year, post the Ukraine invasion. But having said that, we did see a bit of a wobble this morning, but we seem to have recovered and up about 8 bips as it stands. I think we're kind of looking for direction from the US once it opens later in the day. So today we are seeing in terms of the different sectors, resources are recovering, whereas the banks have pulled back significantly and given back all the gains that we've had week to date. And then we've also seen some pullback from the retailers as well, so pulling out of discretionary retailers specifically.
So yesterday I mentioned that Sanlam has its eye on a controlling stake in Afrocentric, but judging by the market reaction for Sanlam's share price, how's the market interpreting the news? I mean, is there an indication or at least a sentiment that Sanlam could be overpaying for Afrocentric?
I don't think it's about a sentiment that they are overpaying. Insurers in general for the year have been struggling, and we can see that in their share prices. However, on the back of the announcement, we did see Afrocentric go up 22% yesterday on the back of the offer that was given at R6 a share. I think more importantly for this possible investment or the purchase is related to the fact that those shareholders who have a shareholding in Afrocentric specifically will now be able to unlock that value. A significant discount in terms of the value of the underlying assets for Afrocentric at a level of about 33% prior to this announcement. So this will enable them to actually unlock that value if they so are willing to do. So I don't think it's necessarily a sentiment around overpaying. I think it's more concern around what their motivation is. And as management have said, it's about a holistic approach. So they'll be able to get the medical aid, they'll be able to get health insurance, as well as the administrator, which is MedScheme. And MedScheme is the second largest administrator in South Africa after Discovery. So we're seeing today that Sanlam is recovering marginally up about 60 bips at the moment.
We had the IMF cutting its global growth forecast for 2023, warning as well of the increasing risk of a recession. Does the inflation fight inherently then lead to a recession? Because either way, the central banks have to do something.
Yeah, it's actually a precarious situation, I think, for central banks as it stand, because the formula isn't certain. So you can attempt to get ahead of the inflation. Some governments, as we've seen, have been a bit delayed in terms of raising interest rates to rein in inflation, but you actually don't know where it's going to settle. So I think at this point, it's not about whether there is a recession, it's about whether it's a hard landing or a soft landing. Most central banks hoping that it will be a soft landing, of course. But as I said, we won't know for certain until we see the actual impact in the next 6 months or so. And so I definitely think that as much as the IMF have come out and reined in what their expectations are, that shouldn't have been a surprise. This is the point of the increase in interest rates across the globe, is to try to temper inflation and to temper economic growth. So not much of a surprise there, but I think the overriding theme will continue to be volatility, number one, and that volatility comes from uncertainty. So until we have a more clear outlook in terms of inflation and the result of that, we're unlikely to see sort of a reining in of interest rates as it stands. We did see those US numbers, employment numbers come out on Friday, and they overshot what we had expected, which means that the Fed is likely to continue with their tightening and probably at about 75 pips at the next interest rate decision. So, yeah, tougher for longer, it would appear.
With increasing monetary policy tightening, analysts have been talking about a possibility of something breaking. I think the UK has come close to that. Are you seeing signs of cracks in the system?
Well, that's the thing, right? So we've seen the Bank of England do a U-turn after the announcement at their mini budget 2 weeks ago in terms of the top tax bracket. So they've made a U-turn now. We've seen now as well, they've declared that they will no longer be doing the emergency bond buying. It should expire on Friday. And this was to assist in liquidity. But there's been hush-hush sort of whispers that they're likely to push this and continue post-Friday. So the back and forth again, lots of uncertainty. And when you talk about cracks, those are the things that we should look at. We're seeing that the Fed is trying to rein in inflation, but yet job numbers continue to increase, and that unemployment number continues to stay or rate continues to stay quite low. So I think in terms of the cracks going forward, it's about how the central banks are going to react, if their reaction is enough to warrant a rein in. But I think that, as I've mentioned in the earlier question, that there's definitely going to be lots of pain for a lot longer.
Before I let you go, we've got earnings season kicking off in the US on Friday. How much angst do you think is going to be blamed on the US dollar?
So that's a tough one to quantify or to say what the level of angst is going to be. But I think the key thing is going to be focused on earnings. We did see in August a lot of earnings warnings that come out from various corporates in the US, and therefore the market reacted accordingly and pulled back about 12% over the last month in the US. I think another key indication is going to be Apple specifically. Based on certain polls, that is sort of the bellwether indicator of what the climate is like and what the impact is on various stocks. So you're going to see from those numbers an indication of what consumer demand has been like, or the impact thereof, what supply chain, whether the easing is actually benefiting, and as you've mentioned, the strength in the dollar. But I think more importantly, what the market's going to be looking out for is going to be guidance from management for post period end, to get an indication of, are the interest rates, as you mentioned, the increase in interest rates having an impact. I would hope that coming out of the pandemic, a lot of these companies have been able to be more prudent in terms of balance sheets. So in terms of their balance sheets, so that would assist and give some support. But I think I just seen PepsiCo numbers come out a few minutes ago with top line organic revenue up about 12%. And that was a beat from what consensus was looking for, which is 10%, which was similar to what we had in the third quarter, where we saw significant beats. So yeah, it's starting to look good, but let's see when the banks come out with their numbers later in the week.
Carmen, thank you so much for your time. That is Carmen Belwana from Absa Asset Management, giving us a perspective on the markets and also what we can be expecting from US earnings season on Friday. That is it from me. We're going to take a quick break. When we come back, we'll have more news for you.